Better? Mhm.
Okay. All right, Ben. So I'm getting a lot of questions about, the process now and what things, what this whole thing has done and, what are the changes and just wanted to run it past you and maybe get it on a video so that, we can answer questions, pretty much answer the questions that are coming in. Um, the first thing everybody's asking me, like, what's going on with rates? So do you have any idea of like where, you know, what we're looking at here for a purchase?
Sure. What we're looking at right now with mortgage rates, they are still historically low, have not gone up. Right now we're seeing 30-year fixed mortgage rates in the low threes.
Okay.
And that's for purchase money or even refinance. But definitely for purchase money right now, you're looking in the low threes for 30-year fixed mortgages. And I don't anticipate that they're going to go up anytime this year. I mean, right now, they're just incredibly, historically attractive right now.
Okay. All right. And so with all of this, with the COVID crisis going on, a lot of people are getting laid off, and underwriting has upped some of their guidelines or up some of their criteria. What are you seeing with credit score, like minimum credit scores? Like, what's going on with that?
Right. One of the big changes that's come about in the last four to 6 weeks is the industry has kind of shifted into requesting higher credit standards for purchase money, for mortgages. And what we're seeing is lenders are raising their minimum expectations for FICO scores. We have been seeing, just 6 months ago, you could really get financing for interest rates and mortgages with credit scores below 600. Right now, you're looking at 620 is right now more or less the floor in regards to what a lot of lenders are willing to accept in terms of minimum FICO scores. So, pre-approvals that have been dated, back to January or even February, they would probably need to be re-upped and reevaluated again, just because of the credit market environment that we're in right now in terms of mortgage financing.
Okay, so if there's somebody that I was working with in January, they couldn't really find anything, and we got a pre-approval back then, they really should just run everything past you just to stay, up to date.
Yeah, and that's really, Mike, that's really the bulk of it. I mean, in terms of the debt to income ratios, they haven't really changed or in any way be impacted. They're still looking at the other underwriting criteria of the files the same. It's just their expectations or minimum requirements for FICO scores really what has been impacted by the credit markets over the last 6 weeks.
Okay. All right, great. Well, that's all we want. That's all I really wanted to know. They're the questions that I'm getting a lot.
Sure.
And I just want to kind of like nip that right now, just so that, so now would be the time to kind of get your act together, right? Talk to you, get the documentation together.
Because of a lot of what we're doing here is really reaching out to those clients that we've been pre-approving to go out and look at homes and kind of like you just said, getting a lot of the act together, getting them where they need to be. And this is the perfect time. I mean, with a lot of the lockdown, the quarantining, it's very difficult to get out there and look at homes. So now is the time to kind of get a lot of the items on their credit that need improving and make sure that that's where it needs to be so they can hit the ground running when inevitably this market opens right back up again and you're having your open houses and such. Definitely now's the time to do it.
Okay, great. Well, it was good talking to you, man. That's all we're going to do for today, and we'll stop recording now.